Well, they say you get to speak at Ecosummit in Berlin twice in your career, once on the way up in your career and once on the way down, and I'm delighted to be back. I thought it felt like 3 or 4 years ago that I came to the previously, and actually I Googled myself today, always fun, to figure out when actually it was, and it was 2013. So congratulations on how this has evolved since then. It's gone from strength to strength, and I see it's now become a family affair. Your son's being very well behaved, I must say. I had to drag my son once to his sister's school music concert because we couldn't get a babysitter, and he really didn't want to be there, and he kind of sulked all the way through. And at the end I said, what was the best thing about the evening? And he said, going to the toilet. So he's being very good. So this session is really, I guess, designed to help founders to decide if you're going to raise capital, what kind of investors do you ideally want to have if you get a choice? Should it be financial VCs, corporate VCs, or a mix? What can they bring, and what can they help you, and maybe can they hinder you as well? So maybe if I could start with our 2 corporate VCs, because in theory you can offer something beyond capital. What do you offer to startups, to your portfolio company? How do you help them to scale?
So as Total Ventures, we are actually financially motivated, and we like investing with other financials in a syndicate. One thing that we can bring in addition to capital are the assets of Total. So Total, as I was mentioning, has a lot of fueling stations and customers that visit our fueling stations. We also can bring potential POCs. We spend about $1 billion in R&D, so we have a large scientific base, and we have a large network across the globe. So when we speak with our investments, we try to introduce them to the large web of people inside of Total and try to think about what are some nice synergies that we can create to help grow the company.
Can you give a specific example of when you've done that and it's really led to something?
Yes, I was going to say one, but it's not public, so.
Okay.
So as an example, we actually are working with a company, Autogrid. We made an investment in 2015, and we had made the investment originally based off both our assets at SunPower as well as Total. Today, we have launched a new program called Total Flex that delivers flexibility using Autogrid technology.
Thanks, Cindi. Malin, what about you?
Yeah, I would like to say that ABB brings a lot of speed. We're much faster than a startup. Not. That's like a big drawback with the big incumbents are like oil tankers. But once we move with power. So, I mean, we have 140,000 employees. We have 6,500 PhDs. And of course, we have clients, we have knowledge. I think venture capital is about creating time and giving resources for the startups to do mistakes, because you do. And you do the wrong product development, you go to the market in the wrong way, you attack the wrong clients, and we can minimize those risks because we know our markets and our clients. So, and in addition to that, as a CVC, we also have an initiative called Synerleap, where we try to establish collaborations between startups, scale-ups, even publicly listed companies, actually, to create real collaborations leading to real revenue for startups within ABB. So since the past 2 years, we have actually executed 56 collaborations. So we're starting 1 a week. And that's, of course, it's a great due diligence process for us. And it's a great way for companies to actually come into our huge organization in a very concrete way. So I think we bring a lot of concrete business opportunities in addition to the capital itself.
Okay, thank you. So to the independent VCs, the financial VCs, is it fair to say that you only kind of write the check, or can you help as well, in different ways maybe?
Probably I can explain a bit our reality with corporate investors. At the LP level, half of my investors are corporate. Lonza, Rio Tinto, Brookfield, Suez. And we have a great relationship. And through these corporate, we can bring a lot of good advice and minimizing the risk with their good experience, one thing. But the other thing we bring is clear view about the IP. And we have a chance to work with Hubs and Town. It's one of the most interesting group in the world to recruit the best talent. They are one of the advisors of Kleiner Perkins and Clean Tech. And I can say at the board level and the team level, we're really good. But the other thing we're doing very well, always we are lead investor. And I knock to the door of these people to say, do you want to play with me? And our role, it's not write a check, because I cannot write a check alone. What I need to do is to write the right check with the right people, with the right team, and bring the right talent rapidly to make sure we'll not have a mistake. And it can include a corporate VC. It can include another VC. We are in a people business. We are not, it's not a silo. We cannot see the world like this.
Sometimes you hear that, you should have, if you're going to have one corporate, you should have more than one to get some balance. Would you agree with that?
Depends. I will use a caricatural point of view. When you start your startup, you start with love money and angels. And once you want to be big and be part of the supermarket and build a big company, you need to dance with devils, it's VC, and you need to dance with monsters. It's corporate VCs. The devil will push you a lot. Would push you a lot to make sure they will have their carried interest. And the corporate VC will do the same thing, depends on what kind of corporate VC they are, and what they want to see is what will be the translation of your technology in their P&L. And it's okay if it's clear, if the governance is clear. And I will never say we need 2, we need 3, we need 4. It's not important. What we need is the right people at the right time and the boss.
Okay. So if you're going to have a monster, I'm thinking a dragon would be good. It seems to be working in Game of Thrones for anybody who's watching that.
No, but
a dragon.
That's also interesting for company startups that rely heavily on IP. Because of course it's a big factor if ABB is on the cap table. Maybe you don't go attack that company if you go to foreign markets. No countries mentioned. So it might be no, but it might be something that will push
sure.
possible threats back.
100% agree with you, because it's vision. You need to put that together and make sure you protect the company properly.
Yeah.
So Martin, how do you feel about being called a devil?
You started asking what can we contribute as financial VCs, and of course we bring the cash, and I think I should highlight 2 things. We obviously know how to realize good exit, and we recently showed it. And then we can bring a lot of guidance for the startups how to deal with the corporate VCs. Maybe that's the most value we can add.
Right.
I would say 3 years ago, my advice to startups would have been, don't take corporate VCs' money if you can get the cash somewhere else. I was wrong, because we recently sold 2 of our portfolio companies. I think they were the largest exits in the clean tech space in Europe at all, or at least in the last few years, with Relayer, which was acquired by Munich Re, and Sonnen acquired by Shell. And in both cases, the acquirer was invested in the company directly, and as well LP in one of the invested financial VCs. So there was a close relationship with all the benefits and downsides, but it worked out pretty well. And we have 2 more examples right now, because we closed financing rounds this year. One of our portfolio company, Electrocare, with Storengy, an Engie subsidiary, and Greencom with Centrica, both with a collaboration agreement attached. And we had a great start with those 2 parties. So yes, I have some concerns, especially for exits, but it turned out to work. And I think the world changed a little bit in the last 3 to 4 years as well.
And that's also nice when we co-invest financial and strategics, because we enter the same agreements, right?
Yep.
So you neutralize a bit. And that's also when you do club deals. We co-invest with Siemens as well, which is a big competitor to us. So it's, in that sense, our investments don't become an ABB company. So it just becomes venture-backed, and then ABB is part of that, but a minority shareholder, and has the same restrictions and vetoes and nothing else but as the financial investors. So.
In terms of exits, actually, I think the data shows that the number of exits to a corporate that's already invested is actually fairly low.
10% we have.
10%.
We're not the pre-M&A. We're not the pre-M&A division.
Right. So it's not a consideration for either of you when you invest that this could be a start of a process.
I think it's actually a disservice. So startup companies out there, it's a disservice when strategics come in and they request that they have a right of first refusal to buy you. It's a disservice for the existing financial investors and the investors who are corporate, who are financially motivated, because you're not going to run a fair process. You're going to dilute the sales process for the exit, and it could also hurt the business in terms of perception around a corporate being in there and driving them toward their initiatives and their desires versus your own ambitions. So I think that could really pollute and be dangerous if corporates ask a lot of very, very heavy-handed strategic terms. Of course, I can understand some companies may be like a Shell and say, oh, I want to invest, and then it's like try before you buy, but it is also risky. So I think it also depends on the stage of the company. And I think an early stage company, it's like a kiss of death to do a heavy row for strategics.
And I think you're right. At least in Sonnen, we had a few strategic investors, and I think it's maybe a very good example because there were some, like our friends from Inven, who are strategic investors but completely acted like a financial VC. 110%, and others like, of course, Shell or Envision had more strategic interests. So it was kind of well balanced, and everything was protected a little bit. But I would say one of the secrets to have a successful relationship is a good alignment. Yep. And stuff like right of first refusals is not a good alignment because it's not reflecting the financial interest of other VCs or the founders. And if you find a way to set up the agreements in a way that everybody's aligned, it also helps to build up a trustful relationship, and that makes life just easier and lets the startups focus on the business and not on shareholder issues.
And when we invest, actually, for our due diligence process, it's mandatory to talk to the existing investors as well as the new investors to make sure that we are aligned with where the future of this company is going, at least in terms of where we think the future of the company is going, what we'd like to see. And we talk about very openly, this is what we think in terms of exit. What is your view? Are we aligned? Where do you see the next capital raise? Where's the funds going? How is it going to grow? And do you see shareholder issues? Do you see board issues? And those are red flags if you talk to shareholders and they have different stories.
Yeah. So that's interesting. You have to kind of think in future rounds who are the investors going to be, because they could put off the next group.
But, and also adding to that, CVC now stands for approximately 30 to 40% of all invested dollars. Yeah. So, I mean, the share of the pie is increasing, so we're going to see it in more and more cap tables. So it's not just a margin thing anymore. So.
Andrée-Lise.
Yeah, if I may, just one comment about corporate venture. I'm in the business for a few years now, and what is a bit disappointing for people like me who build a platform and I'm there for many years, probably 20, 25 years. Sometimes some corporate, not all corporates, but they change their strategy. You have a new CEO, new CEO will come and they say, okay, I love VC, I want to have a strategic view about the market, and the corporate VC is really important for me. And after that, after a few years, this CEO will change, and corporate VC is not so nice or so interesting, and they change their view, and it's normal. Because it's a tiny, tiny object on a big, 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 big animal. And I think one of our challenges is keep the relationship in life. And we have a chance, we have a deal together with ABB, we have a long relationship, we appreciate that, we hope we'll keep it over the time in our deal together in the green mining sector. But we don't know. And I think the stability is really important. When you want to build a company from startup to scale up, the stability of the people, to keep the same people around the table during many years, it's key. because you build the trust. And this job is essentially build the trust. And if the people change over time after 2-3 years, it's really challenging for the team, for the management team, and for the VCs around the table. And it's not because they are corporate VCs, it's because they are part of a big strategy, and it's normal. But we need to live with that, and we need to be cautious about that.
On the other hand, we are an evergreen, which most financial VCs are not. So you can raise one fund, and then you fail, and then there is no more money. So, I mean, entrepreneurs need to know that as well, right? That there is an ending.
But when we're doing a deal, it's generally in one fund. It's not in two funds. It's not cross-funding.
Things take time.
Yeah, always.
And
it's our role to manage portfolio.
Usually more than 10 plus 2 years, usually.
I just closed a new fund with 12 plus 1 plus 1 plus 1.
Good.
I changed the game.
It's better.
I think it's better.
What are the other challenges that you come up against sometimes with a syndicate where you've got a mix of CVCs and VCs in terms of different priorities, alignment? Anyone come across some issues?
I mean, speed is sometimes an issue. It depends on how the funds are set up. If it's a completely separate corporate VC vehicle, it works. Yeah. But off the balance sheet, I mean, then you still have to run the whole process. And even if the investment team is very active and dynamic, they still need to go to their board approvals, which sometimes takes a quarter. And we know that most of the companies are sometimes facing bankruptcy, and you just cannot wait another 2 or 3 months.
To make a rigid stop. Yeah. you need 2 days.
But what I said, this changed a lot in the last 3 years because I think corporate VCs changed their setup and improved a lot.
So how can founders kind of deal with that difference in pace? Do they need to start talking to potential corporate partners earlier, and what's a good way to start engaging with you guys?
I actually suggest just founders and startup companies that are interested in Total as an investor, as a partner, as a POC creator, as a commercial agency, start the conversation with the venture group early. Get them to be integrated somehow with the company, get us to know who you are so we can do the education if we need to about the whole sector if we're going to be going down that route. It may take longer, but sometimes we can move extremely quickly because we know exactly the sector, what we want to do in the sector, who the key players are, and we go after that very proactively. But that is not always the case in a new sector. So approach corporates early. If you are opening a process, even if you want a financial like these guys to lead, start the conversations with corporates like Total early so we can get to know you, and if we have a longer process, we can share with you this is our timeline and this is our process, and we have more time to work through it.
I think it's important for entrepreneurs, and I think it's one of the big mistakes. You need to do your due diligence on us. Do it. It's not just on our side, it's your side too. And you need to speak with our CEOs in our portfolio, and you need to speak with people who say no and they had success and why we said no at this time. Absolutely important, because sometimes they see a money or potential investors can be a corporate, a pure VC as a wow, it's good. No. Sometimes it's not the right person for you, and you need to explore the fit. Ask questions. What I like more, and we are seeing over 600 deals a year, and probably I can see 300 deals personally. And I will say what I like is when I feel I am under investigation. It's the beginning of the real conversation with an entrepreneur. I want to make sure we have a fit. I want to make sure we can build a trust, and the trust needs to be both sides.
I would say what takes time with ABB is not having board meetings because we have fairly close connections, but it's finding the right place within the ABB organization. So we usually say that if you just want money, you shouldn't come to us. You want something else from ABB, then you come to us. So, I mean, we conducted one investment, it took 3 weeks, that's the fastest. And that's for a company that was already having collaborations with ABB. So we already knew them and they knew us. And that's what takes time. And that is what is nice with such an innovation hub like Cinelip. Because then the company finds, you get access to a hunting license, and then you go off and hunt the right division, the right clients, the right data sets, or what have you. And then you find your ambassador from a business unit, from the business side within ABB. And then for us to make the investment when we have the organizational buy-in, then it goes fast. But that is what takes time. And it's also a good thing for the company, so they can really extract the value that they hope to extract. Sometimes they don't extract the value, and then it's a misfit, and then we should not invest anyways. And also it's a learning session for companies, having us on the cap table, but also having us as clients. Like the big incumbents, they have not very favorable paying conditions to startups, right? We can have like 90 days or 120 days or whatever. And then you get to learn how the big corporate works in many ways.
Yeah.
I would say some advice to founders is to echo, it's like a dating game. Because I was on the other side as an entrepreneur raising money, and I raised money from the wrong investor. And it basically was a time that they wanted to take us here and we wanted to go here, and we were completely misaligned. And you learn, I think, over time that it's important who you are dating and who you...
expensive money, right?
Yeah, it's you can get as much money as you want, and maybe for great terms. But if they're not aligned with you, or they're not going to support you to the right thing. So to better really understand who's giving you money and why they're giving you money, ask them if they're a financial. How long is the term of your fund? Where are you in the years of the fund? Do you have a second fund? Ask the corporates, what's your process? Are you financially driven? Are you strategically driven? Are you both? Okay, so which one's more important? And who is your decision maker? What is your process? Who is the business unit? Do you need to sign a business agreement before? Okay, if you don't, then how will you introduce me? What is your job? Do you have a business development person? There are tons of questions that startup founders should be asking all of us around the table to make sure that we are getting in a nice relationship.
I guess, in dating, you can fall in love with someone and then they change. And maybe it's a little like that with corporates, right? The strategy might be aligned at the beginning, but then new CEO or whatever, they go off in another direction, which is sometimes you hear about a misalignment.
It's even more than often that startup makes a pivot. Because you have that as well, right?
I would expect both of us to change.
Yeah, exactly.
Startups will change, and corporates will change, and financials will change. We will all change, but it's how flexible will you be? How strong will you stay with this team? Will you continue to support? Can you make some errors and you'll still be there? Those kind of things are really important to understand.
And if I may, the thing it will be very useful to align people like us is just bring revenues. And when we have revenues, we are all VCs. We are all same. And when our feeling is really great about the fact we accomplished the right thing with the company, generally it's no conflict of interest around the table.
I mean, my first advice, if big corporations ask me what is the best way to engage with startups, is do business with them, be a customer, because this is the proof point that the companies have a business model. It's the fastest way to engage with startups, and the most serious one and honest one. And then the equity investment is maybe a follow-on, but the customer-supplier relationship is the important thing.
I would mention one thing, because we are the equity folks from Total Ventures. We take an equity stake. We could be in conflict of interest if you're doing business on the commercial side. So we like to stay arm's length and walled off from any sort of negotiations between our business unit and our shareholdings in a startup company, because we have a fiduciary duty to our startup and we have a fiduciary duty to our employer. And if you are having discussions and not happy and they want to come to us to renegotiate what's going on, don't do it, because we're in conflict of interest. So know that corporates want to be helping us in terms of the venture team, want to help you, we want to grow, we put money in a company and we want to see you execute. And we will do as much as we can, but don't have us in the middle of doing something that's in conflict.
Right. I guess some corporations are at least partly investing in where the hockey puck is going, not where the business currently is, because they're trying to move in new directions. So it might not be the right time to have a commercial relationship if that startup's doing something that's kind of out there. So we've got 1 minute left. Does anyone in the audience want to ask a question? No, you're getting thirsty. Any last minute points any of you would like to make that we haven't covered? No?
Be open, be upfront, and have a real conversation with your investors.
Well, thank you. So I'm with Global Corporate Venturing. We membership organization for corporates, and we have a gathering of 400 at the Global Corporate Venturing Symposium next week in London. So if anyone's interested in come to that, do have a chat to me, or if you need any data or information about corporate venturing, I'll be happy to talk to you. But thank you very much. It's a wonderful panel, and enjoy the evening. I think there's a photograph now, right, Jan?
Thank you.
Thank you very much.